Hi, it's Mitch from Reverse Mortgage Pros. In this video, I want to talk about an option that's better than a low rate and how you can get 0% interest on part of your reverse mortgage. Let's get started. Now, like any mortgage, getting the best rate possible is always a good idea so you're charged the least amount of interest on your reverse mortgage. In this video, I'm going to show you a method of using a reverse mortgage that saves you more in interest than any low rate possibly can by getting you a 0% interest rate on part of your reverse mortgage. It's a way of using and implementing a reverse mortgage that some of you watching may already know of, but others don't know of or properly consider. And I have had some people reach out to me who said they didn't know that you could do this. So I'm going to show you how it works and also show you a real life example of how this was used and saved $45,000 in interest on a reverse mortgage. Before I get started, if you're new to my channel, I offer free professional help with your reverse mortgage decision. Hit the subscribe button and the thumbs up button below the video to get more content from me and more videos like this to help you decide if a reverse mortgage is a good option for you. As I do at the start of every video, I'm going to explain what is a reverse mortgage in 20 seconds. It's a mortgage for homeowners 55 and over that doesn't require any repayments. You can get around 10 to 55% of your home's value depending on age, property, and location. You can take as much money as you qualify for, but any existing mortgage or home equity line of credit must be paid off first. And it's designed to help you tap into your home equity for retirement to continue to live in your house forever. In this video, I'm going to talk about an option and strategy that's better than a low rate and how you can get 0% interest on part of your reverse mortgage. So this is a way where you can pay less interest regardless of your rate. And the reason is that unlike a regular mortgage, a reverse mortgage doesn't require you to take every dollar up front. You can continue to withdraw from the reverse mortgage over time. And unlike a mortgage where you pay interest on the full amount you borrow, with a reverse mortgage, you only pay interest on the amount you withdraw and take out. So the easiest way to explain this is with some numbers and example. If you took out a regular mortgage, just your standard mortgage from your bank for $300,000, you're charged interest on the full $300,000 from day one. Now, with a reverse mortgage, if you qualified and $300,000 was available, you're only charged interest on the portion you take. You can take some money now and come back and take more of the money later. So, reverse mortgage is completely different to a regular mortgage in this sense. And this means that there's a way you can pay no interest on your reverse mortgage. And here's an example using the same $300,000. With a reverse mortgage, you can take $100,000 now of the 300 that you have available, and then take some or all of the $200,000 later. Until you start actually withdrawing the money, you're paying 0% interest on it. You don't pay any interest, but the money is still available to you. So in this way, a reverse mortgage is actually more like a home equity line of credit than it is a mortgage. And so this opens up an option where you can borrow smartly and effectively pay less interest that's even better than getting a low interest rate. Rather than obsessing about the interest rate, the interest being charged impacting your home equity, you can gradually tap into the funds as you need them, keeping everything at 0% interest until you do. And compounding works both ways. By delaying the withdrawals, you're delaying how fast the interest compounds on a reverse mortgage. This gives you maximum flexibility as well. You can adjust the money and the timing of when you take cash out of the reverse mortgage to match your cash flows as you need. So I'm going to give you a real life example and show how much money you can save by this strategy. So in this example, the person's home was worth $1 million and they qualified for 300,000 as a reverse mortgage. So pretty neatly using the same number that we did before. And we looked at two options. One is taking the full $300,000 upfront at 6.5% interest, and the other is taking $100,000 upfront at 6.5% interest, then borrowing the remaining $200,000 at 6.5% over 5 years, which works out to just a little touch more than $3,333 per month. And here's what the numbers looked like in both scenarios. So in scenario one, where they took the $200,000 upfront, their home equity as they took the reverse mortgage out in year zero was $700,000. Their 1 million house price less their 200,000 reverse mortgage, and after 5 years, the house price had gone up to roughly $1.22 million, and their reverse mortgage balance was 414,000. Their home equity was 806,000, just a touch over that. Now, the second scenario where they took the $100,000 upfront and they took 3,333 per month. Now, at the start, they have more home equity because they actually haven't withdrawn from the reverse mortgage yet. They have $900,000 home equity, but after 5 years, they have way more home equity using the strategy. And remember, they borrowed the exact same amount of money, and ultimately, this doing it this way saved $45,272 in interest and meant that they got to keep $45,272 in their home equity. And of course, the effects of this continue into the future years because that interest will compound into the future years. So the $45,000 in savings might be $60,000 by the end of 10 years just on those savings alone from not paying that $45,000 in interest or having that $45,000 in interest in the first 5 years. And so hopefully this makes sense. Essentially, when you took the second option and you only took 100,000 and you gradually took the money out, you're keeping a big chunk of the reverse mortgage at 0% interest, and that's how you ended up with these savings. So the other question that you might have is like, are there any catches to this? And yes, there are some very important things you need to consider if you're going to do this strategy. First, this isn't available to everyone. If you have an existing mortgage or home equity line of credit balance that needs to be paid off, you have to take more upfront. You can't pay that off in a small amount per month, but you could still do this strategy where you pay off the home equity line of credit and the mortgage, and then you take a small amount per month rather than taking a huge amount upfront. Secondly, the interest rate you're charged on the future withdrawals can change. So there is some risk that rates go up or down. I'm going to talk a little bit more about that in the next slide because there's also some lender risk here. But you have to remember that if you take the money now, you get whatever the rate is now. The interest rate might change in 2 years when you go to make your monthly withdrawal because rates have gone up or down. So there's some interest rate risk here. And there's also what I would call some lender risk. And the third point I want to make is that different lenders charge different fees and rates on the future withdrawals. So you need to make sure you select a good lender who supports the strategy. Some lenders basically don't want you to do this, so they're going to charge a really high rate for you to make future withdrawals, or they might have specific products that don't even allow you to do this. There might be a good rate, might be something going on. So there's definitely some lender risk. You need to make sure that you talk to a professional who understands that this is going to be your strategy, understands the lenders, and can help recommend the best lender if this is something that you want to do and this is a strategy that works for you and your situation. And now, of course, it's not going to work for everybody. Maybe you don't, maybe you've got some renovations, maybe there's a big project you want to spend the money on. That's all totally fine. And you don't need to worry about this if that's your plan, but this is just an option available to some people that could save them interest in the situation where they don't need money upfront in a large amount. So in summary, unlike a regular mortgage, with a reverse mortgage, you don't need to take the full amount upfront. And this means that you're not charged interest on the portion that you don't take. Again, it's completely different to how a regular mortgage works where you don't have this option. You can take the cash gradually over time, and that means you keep the remaining funds available at 0% interest, and this is a great way of saving interest on your reverse mortgage. To take advantage of this, make sure and select a lender who supports this and offers the best fees and rates on future withdrawals to make sure that you're not paying too much money when you go to make these withdrawals into the future. If you are interested in this strategy, I offer a free professional reverse mortgage assessment. I'll advise you if this reverse mortgage is a good solution, if this strategy is a good solution. I'll show you all the hidden costs of each lender, a lender comparison table, and then you'll be able to see which lender is the best fit for you and what you want to do. And I'll also show you the rates on the future withdrawals that the lenders use if this is a strategy that interests you. All it takes is 90 seconds to fill out a simple online form. You can click the link below the video or go to reversemortgagepros.ca/assessment. That's reversemortgagepros.ca/assessment. And if you have any questions or comments on this particular strategy or reverse mortgage in general, leave them in the comment section below and I answer pretty much every comment on every video that I post. Otherwise, I hope you found this information useful. For some of you, it may be eye-opening, something that you didn't know about. For some of you, it might just reinforce something that you were already aware about with a reverse mortgage. Thanks.